Hello, everybody. I'm Helmer, and this is your weekly mortgage market update at the Vetted VA community. I am today is actually July 12th, 2023 for reference, and I'm joined this week with a man I'm proud to call my friend, Randy Teakell. Randy, please tell everybody hello and a little bit about yourself.
So, hello, everybody. I am a long-term mortgage guy. Actually, just hit 34 years in June, and I am just tickled pink to be a part of this organization, the Vetted VA, and to be associated with folks like Hammer, the quality people, the people with the hearts. So that's what we do. We try to help as best we can, and this is certainly a service organization.
Awesome. Thank you. So, well, everybody, we are here to talk to you about mortgage rates and the markets, kind of what's happened over the last week, what's going to happen over the next few weeks. If you've got any questions or comments, we want to hear them. So go ahead and post those. I am watching on Facebook. It comes through. We see them. I'm not sure about the YouTube ones, but we'll have to check on that. So anyway, if you're here live, do us a favor and say hello. I see there's a handful of you on already. Just give us a hashtag hello or a hashtag live. Let us know that you're here. Let us know your name if you don't mind. A lot of times it doesn't show us if you're on StreamYard, the software that we use. If you're watching on the replay, do us a favor. Give us hashtag replay in the comments. Let us know that you did watch. We know that many of you can't make it live, but you do come back and watch us regularly as things come down. And with that said, let's do a little bit of a rate recap. I don't have any slides. Unfortunately, y'all, I had a call run long, so I did not prepare any slides here today. But basically, just looking back, Randy, what would you say rates have been over the last week? Did they were kind of a bit higher last week, if I remember correctly, looking at some of the rate sheets I'm looking at?
Yeah, absolutely. They ticked up for the latter part of last week, and some of that stuff, I guess people say, has to do with traders going on vacations and all that sort of stuff, and having kind of a defensive tack before they go. But the stuff that I was locking was definitely moved higher. And then the last couple of days have corrected just a little bit in our positive direction, but not significantly. We're still in a spot that is definitely higher than we've been since probably November or so. So
awesome. So I agree with you. In fact, I think it was last Thursday where we saw some of the worst rates for the week. Friday, they got a little bit better when we got the jobs data. We had talked about that on last week's show, that one of the big things affecting mortgage rates right now, you've got the labor market and the economy both doing well. And that's basically, that plays into inflation. And the Fed is fighting inflation by raising the Fed funds rate, which therefore affects mortgage rates and kind of pushes them higher. So it's kind of a butterfly effect. And when we had the labor market data last week, it came in pretty good. It was a little bit less than what was expected, though. So we did see rates improve just slightly a little bit on Friday. This week, like you said, they kind of got a little bit better, not much. Today, though, we did get some news from the inflation front that should help rates kind of drop a little bit today and tomorrow. But rates kind of have a floor. For those of you that are following along, VA rates have been in the high sixes and conventional rates have been in the low sevens. Randy, is that what you're seeing as well?
Absolutely. I locked a couple of deals yesterday at 6.625. So
yeah, that's real good. That's actually, those are really good rates for VA rates. And depending on credit score and different things, of course, you always find your unique situation. So you guys want to be aware.
Yeah.
Go ahead and share my screen for a minute. We'll talk about what is affecting mortgage rates and why. So let's pop this up here for you. And today we had let's see, add to stream. Here you go. All right. So inflation hits a 2-year low, giving hope for end to Fed rate hikes. Now, basically, we've got two different things that are kind of going on at this point. The first one is that different Fed members have said that they want to see the Fed raise rates twice more by the end of the year. So right now, if you guys take a look, these are called Fed futures. I've shown these before, but for those of you that may not have seen this before, there's 4 more meetings that are going to occur between now and the end of the year by the Fed. There's one in July, there's one on the 20th of September, November 1st, and December 13th. So we've got these 4 tabs up here. And on July, right now, markets are anticipating a 90% probability the Fed is going to raise rates 0.25% in July. So what your question would be is, well, then I guess mortgage rates are going to move higher in July by 0.25%, right? If the Fed raises rates, those rates will go up. And Randy, is that what's actually going to happen?
You tell me.
All right. Well, no, that's actually not what's going to happen. So mortgage rates actually react ahead of time to the speculation of what's going to happen. So we've already seen this priced in, and that's why we saw mortgage rates move on the VA front from the lower sixes to the mid to high sixes, and on conventional rates push up into the sevens. We saw that markets currently pricing in that the Fed is going to raise rates in July. But if we look at these future meetings in September, the expectation is that the Fed will stay at 5.25 in November. Also, a very strong expectation that they will stay at 5.25. And December, the same thing, over 50% expectation that we'll see those rates stay at 5.25. Now, markets are currently figuring in that we're going to see only one rate increase by the Fed by the end of the year. And the reason that they think that, even though the Fed members have come out and said, hey, we think we need to raise rates 2 more times. A lot of the Fed members have said that. I think 14 out of 18 of the voting members have actually said that. So the reason that markets are kind of discounting that is because of the data that's coming out. And an example of that would be today's inflation data. And this inflation data still showing inflation. Anybody that's spending money knows that money is unfortunately not going as far as it used to. However, we did see improvements to the inflation front. And specifically, if we look, we've got this little chart here, and I'll break down what these numbers actually mean for us. But we've got what's called the CPI, which is the Consumer Price Index. And we've got the Consumer Price Index month over month number, what we call the headline number. It shows inflation was up 2.2%. And it was estimated that it was going to be up 0.3%. So it actually came in with more disinflation. So we're not saying deflation. Prices are not going down. They're just going up slower. So we've seen a little bit of disinflation. It came in a little bit better than expected. And then the headline year over year number is that you're going to see plus 3% versus 3.1%. So if I was buying this can of sparkling water, it's 3% higher than it was a year ago, is what basically what this kind of oversimplification is as we look at inflation. Now we look at something called the core number. And the core number, it takes out prices for energy like gasoline and natural gas, and also for food, because they tend to be the most volatile and they can move up or down very quickly depending on a lot of different variables. So the core number is the one that gets a little bit more attention from the Fed, because that's what they figure is a more stable indicator. And that core number year over year was up 4.8%, where it was estimated that it would be up 5%. And month over month, it was up 0.2%, where it was estimated to be 0.3%. Now, even though it not only beat the expectations, but the expectations were actually a lot lower than what we have seen over the last couple of months. So this shows that we are seeing what's called disinflation. Again, not deflation where prices go down, but disinflation where inflation is happening at a slower rate. And that's going to help mortgage rates to improve over time. But because we saw this very good numbers coming this morning, we're seeing a very strong reaction to that. And if we show you guys the fancy charts with all the pretty colors, what this actually shows you, this plus 0.67, what this equates to is, hey, today is a good day for mortgage rates. And Randy, what have you seen? Have you priced anything out today by chance?
Not yet. My rate sheets normally come out about right now. So.
And what Randy is talking about, what we're jargoning for y'all, is that lenders, they actually tend to issue rates early in the day, what we call the initial rate sheets. And then we can see different, what we call reprices, if the market moves up or down significantly. So when we're seeing the mortgage-backed securities are up 67 basis points, like I showed you on that chart, what that equates to is mortgage rates today will probably be, I would say, maybe an eighth of a rate better, sometimes even 0.25% better for more aggressive lenders. And that can vary from lender to lender. And, so today's going to be a good day for mortgage rates. Randy, with that in mind, do you think that somebody would be well served if they were under contract and they were floating their interest rate? Do you think today would be a good day to lock in?
Yeah, absolutely. From the standpoint that if there's anybody that wasn't already locked, I mean, I think one of the things that I had a handful of contracts come in this week and had conversations with my folks last night and told them that the chances of getting significantly better versus the chances of getting significantly worse definitely would go with being protected.
Yeah.
And so most of this, like everybody agreed that we talked to, or that I talked to last night, that we locked. And I don't think there's going to be any significant improvement until we get, some definitive negative news about the economy that's going to make that have been a bad decision. I think it's
I agree with you. I agree with you 100%. And I also told many other loan officers and originators, mortgage brokers, the same advice, because we ended up getting data this morning that showed, good numbers, good disinflation. But if it had gone just a little bit the other way, we would see rates jump. And as you know, but we'll tell everybody else, when it comes to rates move up very quickly. Lenders are very quick to increase mortgage rates in order to protect themselves and their profits and hedging. But when the rates come down, they tend to come down very slowly. Right. And so today's a good day. We are seeing improvement, but a lot of lenders are holding back and they say, okay, well, we see what's going on the back end of the market, but we're not necessarily going to improve mortgage rates tremendously because there's still a lot of risk, and this may be a one-day event. Tomorrow things may get worse again. So it's usually not something that you're going to see a tremendous improvement just in one day. And I agree with you. Like, the improvement today will be good, but if it had gone the other way and been bad, I think it would have been very, very bad.
Very bad.
Yeah. So
I think that's the biggest thing for my comfort level. I'm still in the same protect what we have versus floating, and obviously that's on contracts that are 30 days or less from closing. When the farther out you go, then right now I might be floating on something that's 60, 90 days out, but and certainly anything 6 months out I'm floating, but currently still feel like that protection is the right thing. Like you, I read tons of different stuff, and there's a lot of people that have been pushing a coming recession for the last 7 or 8 months, that it would be here by now. And then today I'm reading, and there's some things that they're saying that have kept that from happening, and primarily the consumer behavior has been very positive still, and then jobs have still been positive. Although I did read something, I don't know if you read it, but that said that if you back out the government contracts that and just went on private only, that the job sector is not as positive as the overall picture is showing. So there's a bunch of different things that
it's amazing how you can get all these different viewpoints, and everybody says something different, and a lot of times they'll actually say the exact opposite, and they both are very convincing and very convicted in their argument. So you mentioned the government jobs. Now what I'll throw back in is, say, last week we got the ADP private payroll data. So the largest payroll company in the US, ADP, and they look at the number of jobs created, and those are private jobs. That's not government sector. And that was more than double the expectations. It was close to 500,000 jobs created. So that directly conflicts with the idea that it's the government jobs. I've heard that it's part-time. I've heard that it's only seasonal. And these numbers are so manipulated.
Right.
Just to give an example, in April and May, when the labor market data came out, right, for jobs, what we call non-farm payrolls, and over in April and May, these numbers had come out with about 500,000 jobs, in April and in May combined. And what they do is they revise those numbers, and they revise them by over 110,000 less. That's 20%. That's a huge margin. You're not talking 2 or 3%. You're talking 20%. And it's because of just how highly manipulated all the data is. And They do what are called seasonal adjustments, folks, where they, based on the time of the year, they're trying to come up with saying, how do we make this something that's consistent? Because we know that there's more jobs created in December, because there's more people. UPS hires short-term drivers and needs people in the warehouses, and there's retail that needs more people, and so they try to make these seasonal adjustments and all these changes. And so anyway, bottom line, right now we are seeing it's taken some of the pressure off of mortgage rates, where we're not likely to see rates pressure higher in the next few weeks. That's what we're seeing today. But are mortgage rates going to drop significantly? My vote, no. What do you think, Randy?
I'm definitely right there with you. I don't. Like you said, the gains are very slow to be manifest on the rate sheets.
So this one's a little bit off the topic. That's why I held it off for young Parker Sammy Ty, I think is how I would say that. He had a comment, and Randy, I know that you can definitely chime in on this one. So it says, good morning. I already have a question. I don't know if it's asked a lot. I have issues with basically all the builders. Don't worry, we all do. I have not researched all of them, but the ones I looked up, their reviews are not encouraging. One thing you're going to notice is that when people are happy, they don't tend to go and leave the reviews as much as people that are unhappy. But a lot of those unhappy reviews are for a reason. There's genuinely reasons why they were unhappy. What did you do to vet your builder or make a choice of a builder? So, Randy, how would you give young Parker some advice here?
Well, for me, I would say that one of the biggest things is not to leave realtors out of the equation when it comes to new builds, because a positive realtor that is really got a grip on what's going on in their marketplace is going to know builders and complaints, et cetera, on a more granular level. So that's my biggest thing is I think if you get that realtor involved, that's a successful, experienced realtor, and they're going to have had experiences with these folks, maybe even with the specific crew leaders that are involved, et cetera. I think that's something very important. And then the second thing that comes into play always is don't leave out inspections through the process. I'm a big believer in phase inspections for builders, so that you've got someone on your side that's keeping an eye on the progress as it goes, so that you don't have big major things that come up that have to be fixed along the way. So they're people that you're dealing with, and I would just say, since you don't deal with it every day, find a realtor that does a lot of builds, and hook your star to that person. That's the way that I would advise.
Yeah, and it's important to note, y'all, especially even with large companies. We have a company here that I think is national. They're called Schumacher. They do a lot of advertising here in my neck of the woods in Western North Carolina. And there's a house in my neighborhood. I could actually throw a rock and hit it from right over my deck here. And it took them years to build a house that should. Part of the problem is they used local sub builders. So they would subcontract out the building to a local general contractor. And this particular home went through 7 different general contractors, and everyone that came in talked about why the one before them had a problem and made mistakes or did things wrong. And then it would go in a different direction. And then they would, for whatever reason, they were out, and then someone else would go this way and they were out, and someone else. And it was a nightmare for these people that cost tens of thousands of dollars in overruns and things not done right, and things that that were just that, again, the whole thing took way much too long, a lot longer than it should have. And that's something that, like you said, Randy, a local real estate agent could really help and say, hey, here's how that's working in our market. Because a Schumacher build in your market, which you're in Texas, right? So maybe Schumacher, if they're in your neck of the woods, maybe they're dealing with, local builder professionals there, and it's stellar. They've got great reputation in your market, and maybe in my market, they're struggling. So it can be very market specific. It can, and that's why, like Randy said, we've got it down on the screen there. Lean on a real estate agent. Just because you're buying from the builder doesn't mean that that they're looking out for you. And same thing with the mortgage. A lot of times, you can find they'll offer you discounts for using an in-house mortgage company, and it may make sense for you. But you may also find that they may talk you out of using a VA loan when you really should be using your VA entitlement, or they may, have a lot of problems where they're charging you things on the back end, and you think you're saving all this money. So it's always a good idea to get a second opinion when it comes to the mortgage on that as well when you're dealing with a builder, just so that you guys do know that. Not that they're all out to get you, but sometimes, it's kind of like those Prime Day deals. Today is Amazon Prime Day, and you go on and it's a 60% off, and you're like, hey, wow, that's a great price. But tomorrow it'll still be 60% off. And next week it's always 60%. It's like going to Kohl's. They have that sale price, but they never actually charge the full price. It's always the sale price. So it's not always as good as it appears. And they get inspections. People think they're getting a new home and they think, oh, I don't need inspections. But did you want to kind of just talk a little bit more about that?
Yeah, I got a couple of buddies that are inspectors, and the stuff that they bring back to me when we have lunch or whatever, it's kind of terrifying that what they come up with in new builds. It is not something, but again, you're dealing with people, and people aren't perfect, and as long as you're in a position to have somebody that's knowledgeable on your side, on your team, I'd say again those two things. Don't take the fact that there's a salesperson sitting there at the model home or whatever, that they're on your side, because they're not. That's where the realtor comes into play. And then the second thing is that you think there's professional inspections going on, from the county or whatever. Don't trust that. They don't work for you.
Yeah, and they're not, and they're oftentimes inspecting different things. So,
yeah.
Well, everybody, again, just leave you with a quick summary for a rate forecast. Mortgage rates are in a position right now where we don't think they're going to go up too much from here, at least in the near term. However, the one thing we want to watch for is that markets do not believe the Fed when the Fed members are saying that they're going to need to see at least 2 more rate hikes this year. When markets do price that in, and maybe they won't. Maybe we'll get economic data, like Randy said, that shows the economy is slowing down, and that would help to keep rates lower. But if we don't get that data, if we've seen this happen in the last couple of months where markets say, hey, we don't think the Fed is going to be able to follow through. We think the economy is slowing down, that we're seeing a recession, and we know better than the Fed. Well, once that they kind of come to terms and they go, okay, maybe we pulled that one wrong. Maybe we called that one wrong. Maybe we need to go ahead and maybe the Fed knows what they're doing here. We're gonna price that in. We see rates jump. So if we do see a second rate jump from the rate hike from the Fed get priced in, we're going to see rates move up a little bit from here. But that's not something that we see happening in that near term. There's no very strong economic data that we have to worry about that's going to necessarily cause it happen. Probably wouldn't happen until after the July meeting from the Fed, and that'll be on July 26th. So we've got a couple of weeks before we really have to worry about the possibility of seeing rates move up significantly higher from here. However, you want to be careful about trying to time the market and get the best rate, because there is no such thing, right, Randy? You exactly. 34 years in business, you're just now starting to get the hang of it, I bet. How often are you able to time the market and get the best rate?
No, I mean, you got to go with what you got right now. But I would just like to leave one message with folks is I think that there's always a positive or a silver lining. And one of the big things about rates being where they are is that, at least in my markets, and I'm in Texas, in most of the Texas markets, I'm seeing a lot of seller concessions because the houses are still moving. They're just not moving quite as fast, and so they're more likely to be willing to negotiate. And so the actual cost at closing is being mitigated by the seller concessions, etc. So there's positive and negative to what we're in, and I would say the positive is that the chances of finding a home right now, if rates dropped 3% tomorrow, then good luck finding a home, because
they would be just as expensive as they are today, because the prices would skyrocket, because everybody would be bidding, and there'd be bidding wars. And you're right, it's very market specific. In my market, I have a friend of my wife's who is selling her mother's home, and it was on the market for less than a day before it already had offers and sold for $60,000 more than the $290,000 or the $300,000 asking price.
Yeah.
So it's,
Yeah.
you know, we still have over asking offers here. So
Yeah,
but,
well, again, the Austin markets in Texas is still crazy like that to some extent, but not quite as bad as it was. Where that you know, I had a deal that had a cash offer 200,000 over the offer price, and they didn't get accepted. So
yeah,
you know,
it's crazy.
different
So,
world.
well, everybody, Randy, thanks again for joining us this week. Everybody, I hope you found some value in what we said. I know that young Parker, Sammy, Ty here, he said thank you. So he got some value there. Hopefully we're able to give you guys some insight so you know why mortgage rates are moving, how they're moving. You feel more comfortable in the process. You know, I think, what is it that Chris Griffith calls it? Is it human intel? I think
Right.
what they call it, human intel. So hopefully we gave you some human intel. We do this every week. We'd love to have you join us again next week. It's the same time. We do them at 12 p.m. Eastern, 11 p.m. Central, 11 a.m. Central, 10 a.m. Mountain, and of course 9 a.m. Pacific. And we'll see you next week. Take care, everybody.
Perfect.